I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
There are red arrows around the world as Japan's Prime Minister Abe failed to impress. The Nikkei is down 3.7%. Our futures are down and the market's composure has been getting weaker. And we get employment clues with ADP payroll numbers today and the jobs report on Friday. I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing red arrows around the world after our streak of 20 consecutive positive Tuesdays was broken. So at this point, Scott, would you say we could be weak enough to reach the 50-day?
You know, last week we started talking about, the potential of this happening. And I think someone said, all right, Redler, what do you think happens first? I'm like, you know what, gun to head, I think the spiders see, 161 before we see new highs. And then here we are today. I think we're around 163. And the question is, how does it happen? Is it tradable? Can you participate in? And, there's also people out there that are saying, Red Dog, you're just saying the 50-day. What about the 100-day, the 200-day? This market's come so far, which would be a much more sizable correction. But to me, I personally think that at the 50-day, if we do get there, that'll be a spot to, I'll switch gears to get away from my net short type of mentality to, maybe trying to put together a portfolio approach of the best sectors that do hold high. Best stock sectors. Stock and sectors together, stockers.
Well, why don't you show us a visual then of those levels just so we can see for ourselves?
Okay, well, what was important, which you'll see in this chart, is that, the bears finally defended a key level and the bulls weren't able to penetrate. So if you go to the chart here, you will see that, here's a trend that started in November. Very nice gradual trend. We tested it once right here in April and it's still moving higher. Okay, we've had accelerated trends during the process and we've had 3 pivots, this being one of them. So if you remember, on this one, we had this elevated trend that followed the 8-day moving average. We had the Italian elections were the excuse here. We had about a 3% correction. And then once we bounced, the bears couldn't contain the bounce. Then we held higher and continued. Here we had that push through failure. Remember, push through, failed. That's when I think, I got pretty bearish and I got into cash. And then what happened? We held the 50-day, bounced up. So we said, okay, time to put some positions back on. Then we held higher. Then we went through the highs, and that's what created this last move. So on May 22nd, which we've spoken about probably too much, we had that outside day, which was a day to take notice, a red dog reversal, a time to get rid of loose positions, trim some macro positions if you had them, and then figure out or navigate this wedge process. And here's that wedge process. Friday, broke below it, gave some traders who were in their seats a nice trade through 164.50, through 1640, and then we hit the low. So what happened yesterday that was very important? For the first time, in a while, okay, the bears came in and defended a level. They didn't let it just break back through it and squeeze. So they defended the level, closed pretty weak, and now we're opening near this support. So the question really for short-term traders in the next day or so is, do we break below 1622 today, or will it be tomorrow, to get us to our eventual target of 1603? So if you're an intermediate or short-term trader, that's what you're contending with today.
Now, could ADP today or jobs on Friday provide the weakness to pull us to the 50-day? What do you think the market wants to hear?
I think the market's a little unsure. When you're in an uptrend and the market's strong, it's like good news is good news, and bad news, is good news because that means the Fed's just going to keep easing. But when you're in a little bit more of a defensive tape, like we've got into ever since you started to hear the rhetoric about tapering, meaning that if we're in too strong of an environment, the Fed will take their foot off the gas. So now it feels like if we get a too hot number, with the ADP, then maybe we will start tapering in September, which would be bad for the market. But then also, if you get a weaker number, it'll be like, okay, after all the Fed has done, the economy's not getting much better. So I do think at this point, eventually we're going to hit the 50-day, maybe even a little lower. We'll see. So I think the market reaction will be more important, but overall, I still think, if you raised cash, great. If you used high-level stops, you were prudent, and I think this is a time to, maybe take a step back and let the market prove, better levels to create entries for different stocks.
Well, checking in on Japan really quickly, we did talk about the EWJ as a way to play Japan, and after Abe's plan clearly failed to impress investors, do you think there's still a trade there given the weakness?
Well, his conference yesterday was just to address the way things were going, and I guess it failed to impress because the market's telling you, we're down 3.8%. So, for me and for us, I looked at this trade as a potential day-and-a-half trade. Because again, I wasn't looking to put together a portfolio approach, and you never know. Is 16% enough? Is 17% enough? But now it's 18-point-something% off the high. So if you look here at the chart of the EWJ, what's important here is you had your outside day there. So if you were riding this trend, that was your way out. That could have been even your short opportunity. This was your reversal, okay, after this gap got filled. And I know for me, I think I bought somewhere around 1060, 1065, and then into this resistance, which was quite a move, 3.5%, I sold 2/3. So I'm sitting on a third, and now today, I think I come in, and it's trading somewhere around 1060, right kind of around where I bought it, but that also tells you why you should be trimming and trailing. It's not all or nothing, because if you were playing for a secondary move to here, which could have happened, but didn't, that's why you map out resistance 1, resistance 2, you're able to maybe, if you sold some here, and it holds higher, you're able to buy some back. Overall, the 200-day is down here, and a 20% correction takes you right around here, which I do think is more of a spot to buy than to sell. Your time to have sold was during this increase and into this outside day. Now your time to look for opportunity is somewhere in here, and it's never that easy.
Well, let's check the temperature of different sectors across the board, as none of them showed relative strength yesterday. Let's start with retail. The RTH broke below the 21-day for the first time since April 8th, and it's looking pretty bearish. How bearish does it look? Is it on its way to the 50-day?
This does look like it's on its way, and you're seeing some faulty action in some of the bigger names. You look here, the RTH, we talk about time frames. This was your upper area. This is when it broke below the 8-day. So if you're in a thesis where you're going to trail and be involved, as long as it stays above the 8-day and maybe even the 21-day, this was an opportunity for you to say, oh, I'm going to take some profits. Then what happened? It came in, tested this longer-term trend line, and it kind of bounced off it, but it's still below this accelerated line, and now this is starting to curl down. So I do think that the odds are that we get at least a move to the 50-day, which is 50.88, and that could be a spot for you to look. The 200-day is all the way down here, though, so we need to be a little careful. You see stocks like Home Depot, that's been a strong name. It was able finally to break below an area and get downside follow-through. So I would map out some of these key stocks and say, if you want to look for an entry, look at the 50-day here. Last time it touched the 50-day in February, there was a nice buying opportunity. Perhaps you get something like that here. So I would say in this group, if you're looking for names to buy, look around the 50-day, or if you're short them, at least cover at the 50-day.
All right, well, now how about the banks? It's been our best group. They've led the market up for the past month, but showing signs of exhaustion. They're hanging above the 21-day, but if you look at the XLF, could it reach the 50-day?
The 50-day, is something that the strongest groups might not get to. If the spiders get down there and that's where we turn, you want to look to groups that don't get there. So this is one that might not, but it needs to get a little downside in order to add some pressure in the market. And recently they looked like they couldn't do anything wrong until finally yesterday, the banks went red first. When you look at this upper area, a lot of these upper areas have already been broken. So I would say for you, if you're still in there and you want a high-level stop, this is your stop right there. If you're looking for a short, right around this 1960. If you missed the outside day here, or you missed when it broke through the halfway mark of this triangle, here is your level to watch. Breaks this level, you do have a micro spot right here along the way, which is probably around the 100-day. I'm not at the 100-day, I'm sorry, just, what is that? That is 1935, but overall, here's a 50-day at 1891. If you could buy some banks at the 50-day at 1891, I think you're going to steal some, but it's still a long way to get there. So just know where it is so you have a plan when it happens. It happened a few times in 2013, and they've all been viable.
Well, on a different case, the transports have been showing weakness for about the last 2 weeks. Saw another red day yesterday. The IYT found support at its 50-day on Monday, but do you think we could see it go all the way to the 100?
This one is a little trickier because this is showing relative weakness, and if the market breaks down further, this could see a true break. And if you look here at the transports, This was your, your failure at the top. Here is your trickle lower. Now the 8 and 21 are curling, and it's trying to hold the 50-day, and you have a trend line here. So I think this is very important. If you haven't sold yet, or you didn't trim into this strength, this would be a spot. If it starts to break below 111-ish, this could be a group that helps lead the market lower, and you potentially could see a move down to at least 105, and at that point the 200-day will move up. So I think this is a very key area. If it breaks below and comes back above, maybe you get a little bit of a red dog reversal, which would probably mute some of the downside in this group and in the overall markets. But I would watch this, for composure indicators.
Now, the homebuilders ETF, the XHB, is already below its 50-day. During the market pullbacks in November, February, and April, it held the 100-day. So the next time it gets there, does its behavior give you any indication that that time could be any different?
I'm going to put in the 100-day because for some reason I don't have it on there. I don't know why. Every time someone messes with my my indicators here, go basic studies, just give you a little e-signal lesson here. Go to moving averages. So wait, go back real quickly. Where was I? Just basic studies. There it is, all the way up there, moving average. Go 100-day. So this way we see it. So when we're talking about it, you could see the visual. There you go, 100-day, boom. Oh, look at it. There it is. So anyway, you look at this group. Okay, this has been a very, very strong group leading the market most of the time. Here is, I'm just drawing a loose trend here where it's coming all the way into it. And like you said, it held the 100-day here. Every time it's come close, it's been a buying opportunity, not a selling opportunity. You take a closer look here, and you will see that, this was your small outside day, so that was your sell signal, or when it broke below here, and then maybe even when it broke below this. So now when this down open, I might look for a Q long today into this. If it could, get back, go from negative to positive. I think first, try. It should try and hold this, or if you're short this is a spot to cover because, it has been holding. But if it doesn't, then that tells you that's how weak the market is. And if you look at some of the stocks in this group already, Toll Brothers is already at the 200-day. Look at why this outside day means something. Look at that outside day, hasn't found a friend since. Lennar already at its 200-day. So, there have been rolling corrections in these things, and this is a level that it hasn't been able to break for a while. If this does break and close below it and can reclaim it, that's going to tell you that, this correction could get deeper, and that's how you measure things.
Now, utilities among the weakest sectors, as the XLU is already below its 100-day and has almost reached its 200-day. So what if it does not hold that level?
Well, that just shows you that institutions are not stepping in where they usually do for a strong sector. And this goes to show you also that you have to know where you live and know what sector you're in, because the selection matters, and so do your entries and exits, because this was a really strong group for a while until finally rates started to go up and like, oh, I don't need the yield from these utilities anymore because I can get it maybe elsewhere because these stocks don't have the growth. But anyway, you look at the chart here and you will see that, look at the size of this trend, okay, since December or the beginning of the year. It broke right here, okay, and it also broke up here. Look at this upper area. This was your your rounding head area. So if you want to take a closer look, this was your exit. If you are not seeing it right here when it broke the 8-day or came to the 21-day, that's okay. You have to be very I would say seasoned to see something like that. Maybe you could have drawn it right there. That's why you talk about accelerated trends or intermediate trends, and now we're talking more macro. So anyway, if you got out here, great. If you saw this trend line on this reversal day, you got out, okay. If you saw the retest back up to fail, okay. And then PS, now you saw a head and shoulders top pattern that met its measured move, and that hasn't happened for a while. So now it's hugging the 200-day. So if you're trying to be long it versus it, okay. But if all of a sudden we start breaking below 37.28, that's going to show you that this relative weakness could persist and money's not rotating into value. So just be a bit careful here. It's a good spot to try, but if the market corrects further and money doesn't try and come hide here, this is relatively weaker and it's showing more weakness.
All right, coming up, we're going to go in the trenches with high beta tech, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the price point sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, starting with Apple, which struggled to find momentum again yesterday, closed right in front of its 100-day, and now with news of its loss of it in its patent case with Samsung. Do you think that could weaken it enough to break below that level?
You know, a lot of talk is that it's not really that incremental. It's a lot of their old their old phones or old iPads, so it's more backward, but it's a headline. So the question is, can Apple absorb another headline? They absorbed the tax headline, they absorbed the Sloan headline, they absorbed all these Tim Cook headlines down here. So I think it'll be interesting to see if this can go from negative to positive today and show some relative strength. Because I know I've been trying to stay with this. You know, I've been looking at this head and shoulders pattern, or this inverted head and shoulders pattern. I'm sorry, your left shoulder, your head, your right shoulder. But you also have a conflicting pattern here. You have this small ascending channel here that if it starts to break below, you're going to lose some interest from people, you know, including me. You know, I've been trying to be in this. I have a call spread that expires Friday. Right now, below 450. It's not doing so well. You know, it's going to have to go positive and start to, you know, get going above this 454, 457 in order to be on the road to just say the 200-day. But for right now, you know, micro version, let's see if we can hold, you know, this 454. 454 is Brittany right over here. And with that said, that's the chart that I'm looking at, or the chart pattern. So this is, you know, actually 442. Okay, if it stays above 442, I think it's at like 445 today. I think that would show, you know, some commitment to this pattern. If it starts breaking below 442 and 440, you'll probably see guys just throwing the towel and say, you know what, I'm going to wait for another time, maybe as we get closer to the developers conference. So today is somewhat important.
Yeah, maybe don't hang in there, because I do feel as though we hear about these patent cases all the time, and I think this is just one of many. So I don't know how much it will really weigh.
They go back and forth, and now they're going to probably appeal it. So
right.
I think it could be an opportunity. But if it, all of a sudden it's down 3 and closes down 9 today, then you know it's just not showing the relative strength that guys like me would want in order to stay in the trade on a micro basis.
Right. All right. Well, let's talk Google, which broke below Monday's low of 855 yesterday. What if it breaks below of Tuesday's low of 854 today?
Then I think we see the prior pivot, which is at 844, and then the 50-day. And I think that's going to be a spot that I'm going to look to test it long. You know, the stock's been one of the best in breed this year in high beta land. We talked about this descending channel. When you look at the chart, here it is. This was your core buy, so to speak, and then it continued. Then this was your add-on momentum buy when it broke above 844. Continued to follow the 8-day, and then right here is when that upper level broke. Some guys use this as an upper level stop if that was you, or if you use this as a short, you know, you've been getting rewarded this whole way down. So now, if it were to, I would use this as a pivot right now. If it breaks below this area today, okay, which is, what is this? The low here is 854, okay, you could see it move down to the 50-day in this area. And in that area, I think, you know, watch it for some hints of relative strength, watch it for, you know, a buying opportunity. I think anywhere right around here, you know, this far off the highs, to me, is an opportunity, especially if you sold strength or got stopped out here. You have the luxury of looking to be a buyer right in that area.
And LinkedIn, a solid name, but has been in a downtrend since May 21st. How weak does it remain?
You know, on an intermediate basis, it's been very weak. You know, ever since the last quarter when it announced earnings, when people just thought it could do no wrong, it trapped a lot of traders, and since then has been grinding lower. You look at the chart here of LinkedIn, and you will see that was a day of earnings. I remember talking about it. You know, I was actually in it, and I said I would not take LinkedIn into earnings because it did what I thought it would do after earnings. But anyway, here's your gap lower. You know, it tried to fill that gap, but it created a tail showing that sellers still stayed in control. Here is an upper level right there that got engulfed to the downside, so that could have been your sell signal. Then we also talked about this area, this 170-ish, as an area where some people actually look to get short. And now here we are already at the 50-day. So I would use this little 2-day area as a pivot. If it breaks below, maybe look for a cute short, but I think shorting it right now is too tricky. I'd rather see you look for a long, and a long could be right into this area, which comes in right around 155. 155, see if it could hold this prior breakout. This would be, I think, you know, a good spot for at least for a trade, and then maybe even something bigger than that. The 200 days all the way down to the gap up from 2 quarters ago, which comes in around here. So I would say this would be a spot if you're short, at least cover. And if you're looking for, looking for some relative strength, that's an area that I might look to dabble in. I think Sperling's already dabbling a little bit.
All right, Netflix held above Monday's lows yesterday, but still getting pressured from the short-term downtrend. What support level would you say it needs to hold?
This is interesting because it's getting added to the NASDAQ 100, so there's a little extra buy pressure there, and it's getting tight. Netflix doesn't get tight that often before it expands, and there's been some navigation points here too since the last quarter's earnings. You look at Netflix, you'll see we talked about potentially buying it here when it broke above this 210, and then you had another nice inflection point there. Then finally, here's a small outside day, and then when this level broke, some traders got out of the way, maybe even looked short. Then you had another little outside day here. Now, overall, look at this triangle. Look, you have a little bit of a rising uptrend, you have a downtrend. So I would say, if the market holds in there above 227.50, you could see a nice little active trade to the upside, but below this 224-ish, and it breaks below and closes below, you could see a move down back to test the gap at 203. So at this point, I would just watch the action, but something should give here very soon. It's on my radar either way.
All right, and another red day for Amazon, trying to hold the 50-day. How likely does it look that it will breach that level?
It's in this channel, and it didn't have enough momentum to break above 270, 272, but it's holding the upper area of it. So if we continue to get a correction here and it holds the upper area, this is something I would look towards, because next time it gets above 270, 272, if you look at the chart, it could be finally a sustainable move. So I don't think you need to do much with it right now, but if it starts going above 270-ish and closes above there, I would go with it, because ultimately this is showing some relative strength, especially since it didn't get all the way back down to the lower end of the channel, which it usually does. See if this continues, especially if the market does get pressured and this holds up.
Okay, time for some quick hits here. Let's check in on metals. The GLD starting to look better, but what's the key level it needs to get above to pick up any momentum?
I just think this is like dead money trade. It has a double bottom in, and it's holding in there. You look real quickly at the chart. This was your intermediate area to get out of the way, right around 161. Here was your macro area to get out of the way at 148.5, and now you have a small double bottom right in around 130.5. There is a little rising channel here, and you do have some key resistance. It's very erratic in here, though, guys. My traders that are trying to find, follow through from day to day, then they're not having much opportunity or much luck there. So I've been pretty much avoiding it. But I would say if it gets below 134, perhaps it makes its way back down to 130.5, and you have to look at that. If it holds here, if it gets above 137-ish, maybe you get a move to retest 140. So just be very careful, because traders, to me, every time I see someone trading gold or silver, they have that frustrated look. So I think there's some easier things out there.
Oh, well, you've talked about your thesis about going long the TBT or short the TLT. And when it comes to the TBT, it recently saw a nice rally. Above what level do you think we could get a major breakout?
At this point, I think just throw the TBT in the drawer. And if it does get above 69.5, 70, you might get yourself a nice trade. Let's just go to the next one. I like the TBT for the next 6 months to 18 months.
And what about the TLT, which has been declining?
TLT, same thing. You look at the chart here. I've went over this head and shoulders pattern many times, and you go across. It's already broken through the neckline, but it's come from 125. I think ultimately this pattern is going to yield a move all the way down to probably 100-ish. Okay, so with that said, if you're looking at a day to day, it could drive you a little nutty. But overall, I think rallies are to be sold, and ultimately this gets to 100, but it could take some time. All
right, what are your closing thoughts as we head into the trading session today?
I think that the main thing is, I'm coming in net short also. So the question is, can you right now I'm short the spiders. Can I press 162.70 for a quick move down to 162, 161.5 and make additional money? Or with the futures down 6-7 handles, do you cover some and then wait it out? Because I know recently you try and press into key support, you all of a sudden ruin good prices that you have from the days before. So I think what I'll do is I already covered a little bit of my spiders coming in here down 70 cents. And then I'll see in the first 15-20 minutes, if the banks are weak and nothing's rallying and everything's a sea of red, then maybe we get that momentum move for extra cash flow through 162, 60-ish, for then a quick move down to below 162, which then I would cover some. And then if we get to 161.5, then I start, managing my, my puts and my put spread once again.
All right, thanks so much, Scott. Happy trading, everybody. Have a great Wednesday.